So my name is Michael Dent. I'm going to be chairing today. We're going to go through each of the speakers. We'll try and go through in a sort of consistent order this way to just introduce ourselves and say why we're here. So, Toby.
Sure. Move this a little bit, I think. Good afternoon, everyone. My name is Toby Wilde. I've been in prop tech for, I suppose, the last seven years. Before that, I worked as an estate agent, property developer. I come from a third-generation construction family, property developers. Mum had the sort of real estate fund in the 80s and 90s as well. And yeah, I got into data principally because I couldn't find enough deal flow and getting deals that worked. So I launched a prop tech platform called Sprift, which some of you might have heard of, grew to be relatively good and large. And now I have a sort of asset management investment business called Oparo, which invests directly in real estate. Thank you.
Nitin.
Hi guys, I'm Nitin Aggarwal, founder and CEO of Diligence. We are again a prop tech platform which helps people make smart decisions powered by data. I come from property, so I'm an investor, started off my journey about 10, 12 years ago, but I come from a technology corporate background where I've been working for the last couple of decades, leading programs for some of the largest tier 1 organizations across the world. Where recently I was actually involved in leading the strategy for what would be the future of the entire UK's payment industry. So involved pretty much everything and every organization around it. Which is when I decided to actually bring my tech experience and property passion together to help build a platform which can be used by property businesses and investors. And yeah, that's where it brings us here.
Cool, thank you. So yeah, my name is Michael, as I said, Michael Dent. I'm the founder of a company called PropertyData, which a bit similarly we describe as a platform to help people, property investors and developers, make better informed decisions when investing in residential property in the UK. I also co-founded something called What 3 Words, which some of you may have heard of, which is a kind of crazy addressing system. And so, we're going to talk a little bit more about why everyone started their companies in a minute, so I don't want to get to that, but we'll just finish the intros with Hugh.
Thank you, Michael. Hello. So my name's Hugh Gibbs. I'm the co-founder of Searchland. Searchland is, very briefly, it's just about finding land off-market and allowing developers to go direct to the vendor. On an intro side, my sort of entry point at data and planning data was being a town planner. Which is a slightly unusual route, but luckily I didn't care enough about planning to sort of stick with it. But it put me at the sort of front end of looking at ownership, planning constraints, planning applications. And so what we were now doing is wrapping that up as a tech solution and providing it as a sort of online service for sourcing plots of land, which hopefully we can get into a bit later.
Good, thank you, Hugh. Yeah, so we've got a little bit of a structure we're going to follow, just talk about some of the major stuff, but it doesn't need to be super formal. We can do questions at the end, but also any questions at any point halfway through, just stick your hand up and we'll try and answer them. So what I wanted to just discuss first, there's not going to be much up here, so you don't need to be distracted by that, just a reminder of what we're talking about at any given moment. I thought maybe if each of us could do a little bit of an overview of the backstory. I mean, we've covered a little bit in the intros, but why we started our businesses, what problem we were trying to solve, I guess. So Toby.
Cool, okay. So yeah, I think the problem we're trying to solve is, as a family, when my dad was still trying to get our company back up and running, because we sort of lost most of it in '92. We raised some money in about 2014, 2015, and the issues we were having was land prices continued to go up. Post-Brexit, house prices were already coming down, and if you are risk adverse, as we are, then effectively, I think there was 2 deals in a year that I found that we actually were trying to buy. They went for stupid money above asking. So I think for us, the use of property data is about reducing the human capital cost in order to look at as many deals as possible. And cringeworthy to say this, but when you're looking for sort of alpha returns, you need property data because there's so many people trying to do this now, trying to do real estate, that you need to have an edge, and data speeds up and simplifies transactions. So that's why we did it. That's why Sprift came about, which, like these gentlemen's companies, was a centralized property data platform. I realized that for me and my nature, as it were, it was better to take our data, or take our knowledge of data and basically create algorithms as an investment company that forecast in good investment opportunities, be that based on local market data or vulnerabilities of the asset owners to show financial instability, and also when you are a small residential landlord, let's say focusing on one area of the country or one town, then you know your market. What our technology allows us to do is basically take the knowledge that any one person might have as an individual and extrapolate it across the whole of the UK. So that's how we find the best investment opportunities. Thank you.
Thank you. So why did I start Property Diligence site? Well, basically, I grew up in India, came over about 12, 13 years ago, bought my first property within 12 months of coming to the UK. Soon enough, we found out that we were expecting a first child, so we had to move to the family home. Then realized I could leverage a lot of money from my small flat to pay for my bigger flat, which is when I really got interested. This is good, so you can actually make money from property. Went to some property shows and stuff, learned a little bit about it, and then did a few investments over the years. But what I was finding was every time I was doing whether a buy-to-let, HMO, development project or anything, I was finding there's a similar theme that I'm always trying to struggle to put everything together, doing the due diligence, and I was also doing my IT corporate role at that time. And a lot of people like me were also in a similar position where they had a bit of money, but they didn't know what to do, where to invest, and they were always struggling to put all of this information together. Given my background doing solutions for some of the largest organizations across the globe, and I was thinking surely there's got to be a better way of doing this, and tried to look for solutions at that time. I thought surely there's got to be something, but there was bits and bobs here and there, but not exactly what I needed. So I started building something for my own back pocket utility, which eventually then I realized this is a much bigger market, so we should actually build something which can help investors find places where you can actually invest, etc., and helping them make those decisions quicker. And that's kind of how it started initially for my own community, like friends and families, etc., were using it, but then thousands of others were also in the same situation, so we launched it properly a couple of years ago, and we've been expanding ever since.
Great, thank you, Nitin. Yeah, I think that's a great backstory. It's really illustrative of how so many good software products come about from a personal need, first and foremost. So you've got access to the skills to sort of make something for a personal need or a family need, and then it can evolve into something that you can actually put out there into the wider world. And in terms of my story with property data, I'm much more from a software background than a property background, although I've always had a kind of interest in property. And there was this sort of light bulb moment for me, I should say, 4.5 years is how long property data has been going. There was a light bulb moment where I watched a friend who was he was basically trying to get into buy-to-let, and he was doing this kind of process where he was looking at comparables for a particular property he was interested in on Rightmove or whatever, and he was making this spreadsheet with sort of comparables and each one and putting in the square footage to try and calculate the price per square foot and so on, going down the spreadsheet. And I looked at that with my software mindset, and I was just like, that seems a bit crazy, right? Like if maybe gets a digit wrong, and then he gets the local average price per square foot wrong, and then he makes a decision that costs him tens of thousands, hundreds of thousands of pounds. So it was a light bulb moment for me. I was like, there must be a better way of doing this. Maybe we can kind of like suck in the prices from Rightmove and automatically create comparable lists or something like that. And that's kind of how the original idea started, and I, from my perspective, went out there and looked out there and saw there were a few tools doing this, but a lot of them were quite expensive, sort of 500 quid a month for something called Realise, which is a very good piece of software, but sort of 500 quid a month. And I realised that for the average investor, that was probably not something that was attainable. And there weren't really, back then, 4.5 years ago, many options doing this sort of stuff in the sort of sub £100 a month market. So I thought maybe there's an option there for a tool, and we launched at this very show. This has been very kind to us, the Property Investor Show, 4.5 years ago, April 2017. We built our first version in 3 weeks, launched had a stand here 4.5 years ago, and put it out there just to see if people thought there was anything. It was just to test the waters, and people thought it was really interesting, and it was clear to me that there was a real appetite among smaller investors and developers to use data. So it's something maybe that people felt that they should be using, but didn't know exactly how to kind of get started, get stuck in. And so that's the backstory of property data. And 4.5 years later, the tool's kind of evolved a lot, and it does a lot of different things, but still around the same fundamental idea, which is how to support residential property investors buying property in the UK. So, Hugh.
Excellent, thank you. So 4.5 years?
Yeah.
So around the time Mike was writing his first, or presenting here, I was probably writing my first appraisal for a planning application. And if you've ever spoken to a planner, probably the biggest interaction developers have is trying to get a freebie on an appraisal. So I was inundated with looking at plots of land that were coming to me from developers saying, hey, what's the development potential of this site? Typically it was land, that's sort of what I know. And it was very cut and paste what I was doing. I was looking at a plot of land, how big is it? What's on the site? Is there a use class associated with this site? What is the state of the council? Are they a local plan? Are they submitting the local plan? Have they got emerging sites coming forwards? What are the site constraints? Are there flood zones on there? Are there listed buildings nearby? And all you're trying to do is understand one question, which is, in 2 years, 5 years, 10 years, will there be homes on this site? Because the people we were predominantly dealing with were residential developers, but for commercial, it's a very similar concept. And so while the process itself wasn't very creative, it's the fact of putting that data in one place as an appraisal, which is where the value was created for the developer. So that was the sort of core essence for the idea. Now, why did you decide to start the property data business? Well, it's myself and the two other co-founders who are sat front and center. And it's basically making what I was doing very scalable. And so it's putting this information in your hand, and what we do is bring ownership information. That's the site that typically you want to get involved with. It's planning application data, it's constraints data, and it's sales values. And then when you have that information in one place, what you can do is go off-market. And off-market means that you have the power to assess the development potential of land and answer that question, will there be homes here? And then you get to go direct to vendor. Now, similar with Realize being a sort of known name out there, we have a few competitors. And they charge licenses that were, quite frankly, just too expensive to see mass market adoption. So not only did we want to put this data in one place, but also package it in a way that was slightly more affordable and geared more to the idea of how quickly and safely can you get to a landowner without it taking up your time. So ultimately, you can build that relationship, because as anyone knows, property is a relationship business. And if you're not a people's person, stick to stocks and shares, for instance. But I'm sure that's the sort of thought that would be echoed by any property person.
Brilliant, thank you, Hugh. Yeah, one of the things so that I really like about Searchland, which is Hugh's company, and he's not mentioning his competitor, so Land Insight, what some of you may have heard of, which is the sort of a kind of longer standing. I think they've been around since before PropertyData. Both Land Insight and Searchland are helping new houses, new residential units get built, basically. And just from a kind of mission perspective, I think we can all agree there's a housing shortage in the UK. We need to build more. We need to build more housing units, and any piece of software, any data, any way of using data that can help more housing units get built is a good thing. And that's something that Searchland and Land Insight are really good at. And obviously, if we can all make a bit of money in the process, so much the better. So what I want to talk about next is, I'll just give you a little bit of an outline of where I'm going with this, is sort of what I see as the 3 stages to the acquisition of property. So researching areas, sourcing actual specific opportunities, and then doing due diligence on an opportunity that you've identified. So that's, in my mind, how I think of the kind of three-phase process of acquiring property. So I just want everyone on the panel here to talk about their own, kind of how they or their company come at that particular problem, because I know there's kind of differences in approach or what they kind of how they approach that. So yes, that's what we're going to talk about. So just in terms of how to choose, how to identify and research possible areas of investment, you've already touched upon that, Toby. But do you want to go into a bit more detail?
Yeah, sure. So I should probably point out as well, by the way, so we don't have customers. So we're investors. We have. We've raised a significant amount of money to deploy into deals. So everything I say in context is a context of us buying for ourselves. So in terms of researching areas, the beauty about using technology, and our technology is in-house, we use it only for our own research, is knowing where the yields make sense. And sorry, to also caveat this, I think it's important for me also to say what kind of assets we buy. So we buy typically residential units, either social housing or PRS housing. And the first 6 months of this year, we bought about 98 units, and we're trying to do a hell of a lot more at the moment in legals, in the pipeline, etc. But that's completed transactions. So in terms of looking for areas, we're very London-centric at the moment. That's where our portfolio currently is, in South London, but we are looking on a national basis. Because we buy PRS assets and we're looking for long-term hold, it's looking at areas using elements of data that show occupancy levels, transaction times, market liquidity, time on market. It's looking at the spread between sort of local housing allowance and rental allowance to make sure if you're renting to young professionals, then if they find themselves out of work, they're not themselves or with the help of parents, and they're going to be able to cover the rent without doing unaffordable. I mean, I've always been brought up with the mantra: you build affordable housing. Or houses that people can afford. We're not interested in luxury. You won't see us buying a block of flats in Kensington, but you might see us buying a block of flats in Croydon, for instance. Good commuter belts, high occupancy levels, low churn time, decent return on income, return on investment, but also low occupancy levels. Then to actually find the deals, as I said, we have an algorithm that monitors 500 million data touch points in real time across about 5 million assets, looking for financial vulnerabilities within the company. So that we look for assets that are pre-insolvency. So if you owned an asset and you were showing signs of illiquidity, and we were interested in your asset, then there's a chance you get a letter from us saying, look, we want to buy your asset. The most important thing for us is we're not into below market value opportunities. Anyone who says they can get you below market value deals, I think is stringing the truth out a bit. If it's that we're looking to get the right asset at the real market value. The problem is once it goes onto the main market, as I touched upon earlier, there's so many people doing this now, you end up paying above market value for the same asset. So we offer fair prices to people, quick transaction times. We sign pre-exchange agreements the day we offer on it, saying if we pull out, we owe you money. People seem to like that element to us. So yeah, flag assets, flag them through our technology, research them through our real estate. We've got a team who do that. And it's just, again, about speeding up and having more certainty. We don't like a lack of certainty. But yeah, that's it. I think was that all three? I think it was, right? Well, it's quite long anyway.
You've covered all three, so you've gone well ahead of schedule. But so let's keep going. Nitin, on researching areas.
Sure, absolutely. I think that's a very good explanation given by Toby. What I would add is, like I said, the way I started, it was basically coming from somebody starting new into property, wanting to figure out how to do things efficiently. So that's how I started. Ultimately, how do you use data depends on what is it that you want from it, whether you are actually, a typical answer is we want to make money, but it all depends on what that means really, whether you're actually looking for like an income kind of thing or yield sort of thing, or you're actually looking for assets that can grow in value. So essentially, what we've basically come up with is try to use data from like portals and other information and even government sources. We basically try and show you information, how you can actually find places which are best in terms of yield or which are best in terms of appreciation, where can you find the cheapest or the most expensive properties, what can you expect, etc. So that allows you to start filtering out what can you actually achieve in a certain area, because there are some people out there where they'll say, oh, you can make 50% return on something like that. I don't know how many of them are actual genuine opportunities. Maybe one or two here and there, but you're trying to find the right information from the right places. And then it's all about if you can actually club that to what are your typical strategies, whatever that works for you, whether you're looking for buy-to-lets or you're looking for refurbishment projects or anything. So we try and club that into things to actually make it simpler for people to do it. Honestly, when I started my journey, I would go to people, whoever claimed to be property gurus, they said, what do you want? And I'm like, simply, I just want to make money in property, and that's what most people want to do. And then they'll say, oh, do you want appreciation? Do you want this? Do you want that? 50 questions were thrown at me, and I'm like, I don't know really, all of this. So this is where I try to solve the need, which is like, how can you actually really go about problems, whether you are sophisticated, whether you are a newbie, it should be a way to actually solve that. And using data, you can actually use this information. How you use that is depending on your interest level, depending on your skill level, and that's essentially, in a nutshell, what we do.
Yeah, I think that's quite similar to what we found at PropertyData, is that sometimes people want us to tell them what data points they should be interested in, but in a way we can't really do that because that comes down to certain preferences. So what we try and do at PropertyData when it comes to that, like where should I invest, we try and collect as much data as possible about different areas, and then guide people into filtering areas, let's say, by the data points that interest them. So I mean, there are some data points that we can probably all agree with, like a low crime area. So we've got crime data, crimes per 1,000 people per year, or whatever it is. There's probably not many of you going to say, well, actually, I want to invest in a high crime area. So the things like that are kind of fairly uncontroversial. But when it comes to rental yields, do you want to, most people, you might think you want a high rental yield, but of course, traditionally, historically at least, there's been a trade-off between rental yield and capital appreciation. And most people understand that, so we're presenting that data. So if people are yield seeking and are into yields, we can guide them towards the areas that have the higher yields. But if it's something else that they're looking for, maybe they're looking for high concentration of students, or it all depends on the strategy that they're after. And do they want are they going to try and add value to the property they're buying or not? So we try and present this data in a way that encourages people to then kind of put their own strategy into the system and get the system to kind of deliver them the areas that match that strategy. One thing that people ask us all the time is, can you tell me the sort of future capital growth in an area? And of course, that unfortunately is not possible. And anyone who says they can do that is certainly selling you snake oil. So we try and we can certainly say the historical capital growth last 1, 3, 5 years, which might be some guide to how things are progressing in the area. But so that's kind of the high level of how we go about guiding people to look at areas. And what we encourage people to do on property data is kind of maybe use those tools and that data to make a short list of 5 or 10 areas, maybe even less, maybe 2 or 3 or 4 that they're interested in investing in, and then use our more detailed analytics tool to really look at those areas in more detail, compare side by side. And of course, I think we probably all say that data is never a replacement for human intuition and knowing an area really well, and we would always encourage people with property data to do that as well. Of course, it's a really good start if you don't know an area. One reason software like property data can be quite popular with offshore investors who don't have that ability to get out into an area and kind of walk the streets. And obviously with the COVID lockdowns as well, we, at least from property data's perspective, one of those lucky businesses that we saw our subscriber base double in about 6 months because people are thinking, oh shit, I'm stuck in my house. I can't go and look at an area. I can't go and ask the pub landlord what the area is like. But actually, here's a tool that does help me get to grips with different areas and understand the kind of composition of people who live there, how the property market in that area is working, demand, turnover rate in the property market. So all about trying to help people look at those data and look at areas remotely, make that short list, do intensive research, and then move on to just, we would always say, go and look around the area in person and add that to it as well. You guys do anything in terms of the researching the areas?
Yeah, this is a heavily caveated question. And by the way, if you ever figure out how to work out the future values of areas, it's a data set we'd be very interested in. So, yeah, where to invest in? For us, it's you have to ask yourself, and you guys touched on it as well, is what are you trying to invest in? For the purpose of this, I'll keep it pretty simple. I'll sort of go for a land example. But for instance, if you wanted to go down a permitted development route, your question is where is much more around what's the starting state of your building, if you're considering everything to be an opportunity. But let's keep it simple and just sticking with land. A big part of how you ask that question is where are you most likely to get planning? That is often where the money's made on a lot of these deals and why you're bothering to invest in the first place. It's slightly trickier to get to grips with, but there are a few hard and fast rules. And then there are a few tricks that a lot of people aren't really using in a way that's effective. So more often than not, when I have conversations with our customers, it's within a certain driving radius of where they live. Invest in where you know. That's a pretty staple bit of advice. It's things that you know and you can tear apart and you can be comfortable and you can make that gut reaction. But when it comes to digging into that further, there are certain things you can avoid, and that can be things like known constraints. Your flood zones, conservation area is a big one. Are you in the setting of a listed building? And then it's really around finding out where not to look. That's an equally good part of the question. And then what you're left with is a series of assets that you can go and review and make a judgment. And again, we're talking about off-market, so you're taking the effort and the onus is on you to assess the site and then look at that part. We actually did a study through I can't remember the name of the agency, but they interviewed just over 500 investors, and the number one concern that ranked was livability of an area. It was actually concerns over things like crime and safety, and that was the number one thing that investors were concerned with. Third on the list was planning, but they're pretty closely ranked. Am I going to be able to get the planning on there? So it's really about looking at sites and using planning as a way of answering that where question. But the sort of, if you have the benefit to be able to look beyond just your sort of what's in 30 minutes driving, there are some great planning metrics that no one's really using in a way, or the main developers are, but they don't seem to trickle them down to sort of SMEs in the same way, which are, are councils failing on delivery? We hear so much about housing, and the word housing in press is usually followed by crisis. Well, the government's put metrics in so that if a council is failing, they need to approve more homes. I used to work at Tunbridge Wells Council. We only had 86% under-delivered for homes in a year, which isn't that bad. But the sort of conversation behind closed doors, well, we need to approve more because we need to get that close to 100. For reference, failure on delivery is 45%. So there's a big margin between that and what the council I was at was doing. So housing delivery test is one of those metrics. There's two others called local plan position and housing land supply. I won't necessarily go into what they are, but they all trigger the same clause, which the bottom line is we should approve more homes. And so that where question is very much answered by where am I most likely to get planning at a sort of easier rate, and it's looking at those metrics that really help.
Thanks, Hugh. Yeah, I really like that strategy of looking for the councils that are going to have the sort of central government, on their case about not building enough houses, and also the investing within driving distance from your home, which I think is a really good one. We have customers who come on and say, I want the best area with the best yields wherever it is. I'll drive 400 miles to go and manage an investment property, and I'll have someone manage it. And I always say, even you end up managing the managers, you're going to have to visit these properties. So 400 miles away, probably not the best idea, no matter how good the data looks. And I think that's an example of just applying the human intuition. You're not robots. We can't just be an algorithm choosing the area, choosing the property. You've got to apply that common sense, that human intuition, and that's what makes it all kind of come together, makes the data make sense. So in terms of sourcing opportunities, we can jump around a bit. I feel like, Toby, you've already covered it really, which I thought was very interesting, how you guys are looking for assets in distress or pre-distress potentially, which I think is a great strategy if you've got that data. I want to talk about off-market versus on-market here, really, because that's the kind of discrepancy you've got here. So we at PropertyData have gone down maybe a different route to a lot of the other companies. We built a tool, our kind of sourcing tools really focus on-market opportunities. And what that means is stuff that is already listed by an agent on a portal, and we're using algorithms to identify that stuff, quickly sort through the good opportunities, basically. Or it works around strategy. So we've got 29, I think, different strategies that we have, so unmodernised properties, repossessed properties, properties for cash buyers only. And these are strategies that different investors are interested in different strategies, and we use algorithms and data to identify those properties. We have an alert system, so you can tell I'm interested in this area, you define the area, you get alerts, and then when you see there's an unmodernised property 35 miles from my home, it's just come on the market today, and you can pursue that opportunity and go and kind of research it in more detail. So that's how we've approached the sourcing thing, is to focus on that, using software and data to quickly identify on-market opportunities. And people sometimes say, these are opportunities that are just out there on Rightmove, Zoopla, and that's absolutely true. I think that possibly what they're underestimating is the time that you would need to spend sort of sorting through this huge volume of properties, about 1 million properties on the market for sale or for rent, at least at any one time. So, sorting through those opportunities is quite time sensitive, and it might take you 3 weeks to discover it, by which time maybe you've missed the boat. It's a really good opportunity. So, and I think the advantage of the on-market sourcing approach is that, it's on-market with a willing seller. You're not going to have to try and persuade someone to sell. But having said all that, I think the off-market sourcing is really, really interesting as well. It's not something we do at PropertyData, but so I'm just going to go straight back to you. If you, I know this is what you guys are doing. You've talked about it a bit already, but so how is it, if I want to use your website to source off-market properties, what does that look like? How does that work?
Yeah, off-market. You definitely touched on this. If you're on market, there's so much momentum that's already happened behind the scenes on that site, which is such a clear entry point for anyone investing. Off-market, exactly the same principles of assessing a site. You just have one very caveated question that's sort of in the back of your head, which is you have no control over what that landowner wants to do. And you wouldn't be a very good property investor if you've got a massive sum of money that you're willing to give them without, because ideally you would want to go under sort of market value. You've put the effort in. They're not that interested in land, otherwise they would have done something themselves. So with that in mind, you haven't got control over what they want to do. So what you do have control over is the number of sites you can approach. And I think the very easy way to distinguish the two customer groups of on-market and off-market is an off-market person would have to maybe reach out to upwards of 100 site owners or landowners. You could still do that with on-market, and you probably have a much better idea over their sort of outreach. I mean, for us, probably close to 500 plus sites you'd need to sort of be engaging with. And that's what you have control over. How many sites you find, who you reach out to. The industry talks about a 5 to 10% conversion rate. Varies massively. I've been site finding in Cornwall, and I've had 25%. Mind you, I only found 16 sites that I was interested in. And then if I look in the more competitive areas of, say, the home counties, Uttlesford, as low as 2 to 3%.
So sorry, what is this percentage? This is you send out letters, and that's how many people sort of bite, basically?
Yeah, so I will run a letter campaign. And my letter campaign very much, letters are very much how our industry communicates, and it's how the sites come to you. And that's a very good point. So
if we just go back a step, sorry to interrupt, if you go back a step, so how am I, if I'm using your software, how am I kind of putting together that mailing list of who I'm going to email? What do I put in my criteria for what kind of land I'm interested in?
Perfect, yeah. So that's the point. How do you find the sites and how do you find them quickly? Well, it's all on the platform. It's a software solution. And so for me, it's very much around looking at, in fact, we've got a tool called the sourcing tool. And what the sourcing tool does is it takes a plot of land, and there's 20 plus million plots of land that are under single title ownership. And we've enriched that with all the data on there. So we can tell you how many units are already on there. So if there's flats, if there's 5 homes that are on there, we can look at the use class, the planning history of those. And so the sourcing tool that we've built is very much the data-led approach to sourcing sites that you think look good for your portfolio. And an example would be, I want to find sites that are over 500 square meters, but less than, say, 1 hectare. Sorry for using different metrics. That there is only 1 home on there. I don't want to be dealing with multiple landowners. The issue compounds the moment you get more heads in the room. I don't want there to be any constraints on the site. Remember, it's off market. Why, if you have the choice of looking at all the sites, why would you look at any that are constrained? Already use class C3, no change of use required. Now you're starting to get to a point where you've got a target area, so you're looking at a town which probably is in driving distance, and you've got, say, 100 sites on there. On our platform, you can very quickly go through, dismiss the ones that you know are just no-goers from the beginning, and then send a letter campaign from the platform. So it's very much around a data-led approach to finding the sites that meet your criteria, doing some due diligence, because automation is great in this industry, but if you automate the whole process, you're going to miss out some very key elements. And then having a hit list, and that hit list is something you send letters to. Numbers are the key thing in there, and then the idea of a letter campaign. So that response rate that I was talking about is the recipients who actually get back to me. Now that 5 to 10% figure, that's people coming back to you also saying, please never contact me again. And people kind of forget that bit. That is the majority of the responses. But that's okay, because you can kind of get over that, because you get used to it. And it's the ones that come back and say, yeah, I'm interested, let's speak. And you need to find a few of those, because even then they're going to have unrealistic expectations. But yeah, the big difference on market, off market. Off market, you've got to be hitting the numbers, and the quicker and the safer you can get to those landowners, the more success you're going to have. Because I've seen so many people who start with all the energy in the world, and they're going to find all these sites, and they find the sites. They run a 1-letter campaign, which quite frankly, they're probably not opening. And then they don't hear back, and then they lose their enthusiasm. I've been through that process. When any site finding I always did in a team. And the morale issue is one of the issues that doesn't really get spoken about. The moment you get a response, you actually have a lot more energy in the system. But it's numbers, it's response rates, and it's how quickly can you find those sites.
That's great. So Hugh's illustrated again. You can have, using the data to find the sites. That's great. Honing your data criteria. Powerful piece of software like Searchland. Fantastic. You still need that human side of the morale. When you're not getting a good response rate, you need a thick skin. It's what I've learned about off-market sourcing. Is you need to be prepared to get a lot of non-responses or not very friendly responses, and to just have the volumes, basically, isn't it? So that percentage rate gives you a few good opportunities of people who are actually interested in.
And one more, sorry, is just to expect to get calls from someone saying, "Hello, it's Graham." You wrote to me. what are you supposed to do with that information? So it's about getting that stuff, making sure you've got your systems in place, so when Graham does call, you can find the letter, and more importantly, you can find the site, and you can be talking about the same thing. So yeah, that's all part of the process. But
If you knew the name of Graham's dog, that would be fantastic. So
well, then you're onto a good conversation right there, and that's the people's business. You know, if you could
GDPR probably ruins that. So Nitin, your website, you've got deals in the name. So if I want to source a deal on your website, what does that look like?
Sure. I think before we get into the details, but I think some very good points both by Michael and Hugh. Actually, I think from our perspective, like you said, it's called Property Deals Insight. So you want to be basically helping people find those deals. Our approach is quite similar to yours. Basically, we look at on-market opportunities. Well, up until recently was like that. So we help people. We try and categorize things which we are either sourcing from the portals. We also got partnerships with some direct providers. So we've actually launched our listing service a few months ago. So we've got sourcers and landlords and direct portfolio owners who are actually putting their deals in there, which is, again, we still categorize it so that people don't have to be figuring out what does this mean. Is it suitable for flipping? Is it suitable for cash buys? Is it a repossession one? So we try and categorize them so that people don't have to be doing all of that work. It doesn't mean that one thing can't fit into two categories, but it just tries to show you the breakdown. What we also try and do is we basically, I mean, typically what you go into portals and look for properties, and you see a lot of them. How do you know which one's going to be a good one for flipping, which one's going to be a good one for, let's say, refurbing, etc.? I mean, yes, you can do your due diligence. You can put in weeks or hours or months, basically, depending on how efficient you are. But the whole point is using technology to help. I mean, some of the points which were mentioned earlier, people think, oh, you guys can't replace it. I mean, definitely, we're not really trying to replace people. We're trying to help you with the stuff which can be left to technology, right? So more and more data sources that we add, more and more information that is actually provided, we help make those decisions. So we're trying to cut down on the manual processes which people would do. And people say, I mean, of course, off-market is an amazing thing, but like, everyone says, oh, it has to be an off-market opportunity. I personally bought a property a few years ago, which was on the market for $575. I got it for $472. It was simply a very old listing. Nobody bothered about it. And I put an offer, and they accepted it, spent about 20 grand on it, got an estate agent to value it, to put it back on the market for 600K. So this was an on-market property, which was listed on all the major sites. I mean, yes, you will have more competition, but I only need to make 1, 2, 3, 4, however many deals you need to make, right? So it's not like every single property which has to be off market. Of course, if you can do off market in the right way, as you mentioned, then nothing like that, right? So it's all about what strategy works for you, and you don't have to be buying, like there are about 1.5 million properties sold every year, right? So, I mean, how many deals do you want to be making? It's essentially using technology, which in the way that works for you. That's essentially, I think, I'd like to say.
Right. So even with on-market, you have a hit rate, which is, you need to approach multiple properties. Absolutely. Probably less than with the off-market sourcing approach. But okay. So the last thing I wanted to talk about was due diligence, which I think is a boring but important part of the process of sourcing residential property and acquiring it. So what I think is quite cool about Searchland is, to some extent, you've done your due diligence already. If you said you filtered out conservation areas, whatever, as a developer, you filtered out flood zones, you filtered out a lot of the bad stuff. I suppose on property data, you start a little bit behind that, because you're sourcing on-market opportunities, you find an opportunity. So how we approach the due diligence process is answering a lot of those questions. So we got kind of same way you guys, I think, do it. Sort of nice high-res maps from Ordnance Survey or whatever, satellite, looking at the boundaries, planning issues, flood risk, all the stuff you talked about, really, we're doing in our kind of due diligence stage. So the person I wanted to bring in really on this is Toby, because you guys are investing, I guess, your own money that you've raised from investors, but it's serious amounts of money. You're buying big investments. So how do you use data in the due diligence process?
Well, it all comes down to data and due diligence. And just to let you guys know, I mean, we don't just buy stuff off our algorithm. We buy off the market, like on market. We buy it off the open market as well when the data suggests that we should do so. If I can just hang my hat on something though, I can actually say I can forecast forward-looking prices. It's very simple.
It's a brave man, you say so.
I'm more than happy to do so. I'll nail my master flag to the colour mast here. You can take a 10-year view, you'll never lose money. It's as simple as that. Like, I can't predict next year after, but buy stuff, hold it for 10 years. If you're in it to trade and get rich quickly, you're going to lose money. We've, as a family, we built 3,500 houses, and we never made hardly any money on that. But the bit of money we did, we put into our buy-to-let portfolio, and that, 20 years later, is worth far more, even as a very, very small portfolio, than having built all those houses. Take a 10, 20-year view, and you will always make money.
Except in the north.
Depends where in the north. You're still going to make yield, aren't you? But
maybe not the next one.
yeah, but that's our investment strategy. We don't put spades in ground anymore, because you put a spade in the ground, chances are you can, unless you get the planning uplift. Once you start buying with planning, you're going to lose money. But in terms of going on to due diligence, we have such faith in our level of data now within our business that we often buy stuff unseen. To be quite honest with you, stuff will come onto the open market, will flag up on our platform. We'll look at it, ask for a copy of the floor plan, go in with an offer. If it's quite often we're going at asking price, so we don't mess people around. Once it's agreed, we go down, measure the building, look at it structurally, and then sign the pre-exchange agreement. That's what the data allows you to do. I mean, to be brutally honest, the government doesn't want buy-to-let, SME, small developers anymore. They want all of this to become an institutionalized investment, right? You've got Nationwide Building Society doing developments to buy in-house. Lloyds have just announced they're going to become the biggest landlord in the UK. The days of the SME like developer, investor are getting harder and harder. Like 30 years ago, my dad tells this story, he went into an auction with less than 10 people and 70 lots, and everyone got sold. You go in an auction room now, everyone's clapping with every bid. It's so tough. Without the use of guys like these data, I think you waste so much time, and the lost opportunity cost of human capital of not having access to data to find decent returns. I think we've got to the stage now where the critical mass of users using data means you're bidding against these people. They're a lot more nimble if you are using data. So I think it's just at this stage in real estate, the UI UX of guys like these platforms is so easy to use. You can interpret the data how you want. And just to touch on another thing, so our catchphrase is actually algorithm-based, people-driven real estate. We still have real estate guys sat in the office who sit there analyzing the data every day. We have guys on the ground managing projects, refurbs principally. So you have to have that human touch. You will always have a human touch. This is not going to be Skynet. We're not going to have data, real estate just be destroyed by an algorithm one day. But I'd say at this stage, you have to use it really if you want to compete against everyone else.
Yeah, and I think that's what all three of us here with the kind of lower cost, I certainly was struck 4.5 years ago by the fact that the big guys were using data and the little guys weren't. And I think you're right, it's becoming harder and harder to be a little guy, and you've got to use the data if you're going to make it work, if you're going to keep up. So before we get on to questions, I'll sort of quick fire round to end it all. So and it's a bit of an annoying question, but there's so much data out there. So we're just going to go through everyone and say, if you just as one type of data or using data in one way, what should it be? So we'll start this side with Hugh.
This is actually a very easy question. It's planning applications and ideally refused planning applications.
Okay, you can expand on it just a tiny bit more than that.
If you read the case officer reports for those planning applications, you'll see every reason you need why you shouldn't buy a site similar to that site.
Okay, brilliant. Thank you. So for me, it's price per square foot. You guys might be using that already, but it's a cultural thing that fascinates me. You go to mainland Europe, you go to America, and they use price per square foot, price per square meter in mainland Europe, and they've been using it for years, and that's how people conceptualize property. For some reason in this country, we're more stuck with things, it's a 3-bedroom, it's a 4-bedroom. What matters to me, I've always thought, is the square footage. In London, that's sort of caught on as a concept, but I find the further you go from London, the less people talk about property in terms of square footage and price per square foot. So I think you probably find price per square foot data on all three of the platforms up here, and it's just, I would encourage anyone to really just totally reframe the way you think about property in terms of square footage, price per square foot, value add by adding square foot, whatever. Just think of it like that. Nitin.
I think that's a very good point, actually, Michael. I mean, obviously, I grew up in India, as I said earlier. I mean, it did catch me by surprise when I came in. Like, well, this is such a in terms of such a big real estate market in the UK. Everybody from the worldwide actually are looking to invest in here. And it was really, really shocking in a way when if one house sells, let's say, for 500k on a street, everybody else is almost fighting to try and justify why my house should be more than that, because people don't have that information. I mean, you need to be having that information to be able to tell, okay, why a certain property has got to be this much versus the other. I mean, that is really there. But I think the other part of it is, I mean, from my perspective, I had to use it one way. It has to be like, what value would you be actually paying for a certain house? I mean, it does touch upon the same thing, but we try and kind of, I mean, ultimately anybody can find deals, whether you're off market, on market, whatever that is. It's about what value should you be paying for that property. Ultimately, that comes down to that. And with the tax regulation and everything else getting tighter and tighter, you want to make sure you don't overpay, or it's not about trying to find, like Toby said, below market value properties. It's about paying the right price. What that right price is the key aspect from my perspective.
Great. Dan, Toby.
Market liquidity, historic transaction data, current transaction data, time on market, both for lettings and for sales. It's all about market liquidity for us.
Good, brilliant. So I hope that I'm not going to go as far as say we've entertained you, but I hope that we've informed you a little bit and turned what some people find a little bit of a dry topic, not into something interesting. We've got some time left for questions, so anyone willing to offer a question? Yes.
Just wanted to know what the roadmap was for property data. I've been a subscriber for the last 3 years and I love it.
Oh yeah, we got this man who's going to offer you a mic, especially if you're going to say nice things about property data. Bring in the mic fast.
The lifetime subscriber.
So I should, yeah, free subscription.
Get this on camera.
Yes. Well, in fact, the last slide is magic. Well, it doesn't have our names on, so let me go back to the first one. There we go.
By the way, while we're sorting the mic,
We sat in the wrong order.
okay.
Yeah, I'll run it around.
Oh, thank you, Toby.
Well, I'm on the edge, so I might as well.
Sure. I was just going to say, while we're actually sorting the mic, we are actually exhibiting for the first time in Property Investor Show. We are at stand 80, so anyone who wants to come and see us, please come.
Great. And are you exhibiting? No.
No, not this year.
Okay, so the rest of us, you can also just come and see us afterwards, but definitely go and check out Nitin's stand. So, sorry, your man with a question.
I just wanted to know what the roadmap was for property data in the next couple of years.
It's a great question. We don't plan a couple of years in advance because that's too much, but we try and not kind of announce too much of what we're going to do, but we've got all sorts of stuff. At the moment, we're working on a redesign of the site just to keep things kind of fresh and easier to use. We're working on our HMO register, something you may have seen that we announced in the last couple of months, which is just an attempt to build a national register of HMOs, because one of the things about data is sometimes there's a convenient national data set, other times the data is kind of hidden in the case of HMO registers, it's every single council have an HMO register, it's in some obscure format, difficult to access, and so we're trying to pull that together into a national database. So we're going to keep working on that. We're trying to expand our coverage to Scotland. I know that's a bit boring if you're not interested in investing in Scotland. There's always a cost-benefit analysis for people like us. It's can be a lot of effort and more money to get the Scottish data, but it is 8% of the population, and they're quite vocal. They get quite cross when you don't cover Scotland. So we're trying to really improve our coverage of Scotland. What else? I think those are the main stuff. I mean, one of the things we've done is always build based on user feedback, right? So we launched 4.5 years ago at this show. We'd spent 3 weeks building a really simple version of what we've got now, way simpler. And people said, most people said they thought it was cool, they liked it, but could it do ABC? And we couldn't do any of it. So I thought we came away from this show 4.5 years ago, both feeling quite buoyed by the positive feedback, but also with our list of the next things that we were going to do. So, really, what we should do in 3 months, you tell me. You tell me what the thing that is missing that would make your life much easier. And when you and 5 other people say it, we'll try and build it.
I've sent you emails over the last couple of years, and you do respond back personally sometimes.
Well, there you go.
Yeah.
So good.
I really enjoyed using the tool.
Thank you. Good.
I didn't get paid to say
Now
this.
we should find a grumpy subscriber to add some balance.
I can pretend to be one.
We've got a question over here. Can we run the mic? Thank you so much.
What data software do RICS surveyors use?
That's a good question. Quite a lot of them are going to use the ones I know we got. I mean, most of our users of property data are property investors and developers. We've probably got 5% of the users are surveyors, and they're using our valuation tools as the basis. And then we always say, our lawyers make us say on the bottom of the valuation, there is no substitute for a valuation by a RICS chartered surveyor. But the truth is, a lot of them are starting with a tool like property data, but then adding that intuition and that those decade or two of experience onto that to produce, because the software can never know everything. But I think the truth is more and more tools like property data. I mean, you guys, you got any surveyors on the platform?
Yeah, we recently signed it's a surveying arm of a national home builder, and they only use the price paid tool, so looking at the analysis, price per square foot, and it's exactly that. It's that knee-jerk reaction, and yeah, they will be funneling in their own data from other sources. But when it comes to making a very quick assessment, that's where the price per square foot and the data in one place is kind of getting their value for them.
If it's all right, I can answer in terms of statistically. 85% of valuers use a solution called eTech Solutions, which sold out 2 years ago for £150 million. They're based in Worcestershire. That's where the valuation platform is. And they've just started an AVM as well. They've got about 50 guys in the room working on automated valuations. Nice guys, very nice guys. But yeah, 85% of the market they control. But they've been around for 15 years, I think.
Yeah, I think obviously it's already been mainly covered, but I guess more and more companies, more and more surveyors are actually starting to rely on data, starting to rely on AVMs. I mean, there have been some offerings. I don't want to name some, but I think there have been some which are more like lead magnets and stuff, where you just give a number and throw it in, and that's not. I don't know. I mean, how much you can trust it, because it depends on what data it is. I think we sort of believe in, when you're giving a surveyor's report or something, you need to actually put something together. A lot of times the surveyors tell us, or agents tell us, that actually they ask us 3 or 4 comparables, and that's what their valuation comes up with. I personally seen so many cases where all they do valuation based on is simply what's the lender's kind of aptitude towards risk. So basically that's what some of the things they look at. However, if they are using data and AVMs and the reports which we guys are providing, then that helps them with a much more informed decision. It's not just the valuation that's important. Obviously, they need to look at the structural element, and also that's not something which we are saying the data does, but it kind of, in terms of the actual numbers, it definitely does help.
Great, thank you. Any other questions? Wait for the microphone.
He's found himself a second job.
Yeah, it's fantastic.
So my question is mainly for property data. I don't know if any other websites would have such information as well, but it's mainly about the time, the listing time. How long has a property been on the market for, and if in property data, is there any charts or any easy to see tool?
Yeah, for sure. So for all the listings we have from all the major portals, we track when we first spotted it, which hopefully is pretty shortly after it goes on market, and then we track how long it's been on the market, track price changes as well. So we're using that data in 2 ways. We're using it in our sourcing tool, so you can identify one. I talked about how we had 29 strategies. One of those strategies is been on the market for a long time, and another one of those strategies is price reduced by, let's say, more than 15%. And you can combine strategies as well. So you can look for properties that have been on the market for a long time and are unmodernized, for example. So by combining 2 strategies, you can really find kind of interesting properties that match what you're looking for very quickly. And then we're also using that data in aggregate in the researching areas. Sort of sections of our website, so we think the key figure is turnover, right? Like how fast is the market turning over an area? You've got 100 properties on market and they're selling 10 a month on average, that's 10%. And so we're using that data. How long is an average property staying on the market? How quickly is the market turning over? Really is an indicator of demand in an area. And in a way, I think, and it's been mentioned already, but rental demand is actually the more interesting one rather than sales demand, because you don't necessarily want to buy in an area that has either low or high sales demand, but you do want to buy in an area that has high rental demand. So we are looking for areas where the average rental listing is not staying on the market long. It's disappearing quite quickly, or going, let agreed. So the let agreed flag, and where you've got the shorter the properties are staying on the market, on the rental market, the better the sign is that that's somewhere that you should be looking to buy a buy-to-let property.
Just to go back to the original, but that data is available on PropertyData.
Yes. Yeah.
Oh, right. I just
everything I've just said is available, and you can.
I'm still a bit of a newbie, so
I'm
going to look for it. Yeah.
Thank you. Any other questions? You got one, just.
There's Andy.
Yeah, very interested in chat, by the way. You've spoken most about the most exciting bit of property, which is investment acquisition. What thoughts have you guys got to the use of data to support disposal decisions? Because that's when you make the money when you sell. I guess, Toby, your family were burnt out in 1992, so I guess you must have some tools that keep you guys safe now.
To be honest with you, our two investment strategies are we do social housing, as I said, so we know when we're leaving because we rent them back to the government for 10 to 25 years, depending on the size of the asset, depending on. But yeah, we lease them to the government 10 to 25 years, and we track the LHA rather than tracking inflation. So we're not. But also we refurb the assets occasionally. We provide them really good quality. So I know exactly when the exit will be on those ones, unless I get an offer on a compounded yield or compressed yield, sorry, for the thing. But on our PRS fund, for instance, we know we're going to exit via a listing. So then when you get to a certain scale, you work on rental values, rental valuation matrices, so it almost becomes irrelevant what the market's doing, and the relevancy is what your rent roll is, because then you sell on a multiplier of that. So that's what we're gearing up to. So 4 or 5 years from now, we'll probably list the whole portfolio and exit that way. But in terms of analysing data, I think that's a personal decision, and also down to your mortgage, right? If you've got an early redemption, then sometimes it makes it unaffordable too. So I can't really answer that from the wider market, I'm afraid.
Yeah, I think very good question, obviously. I guess the whole point is, as you rightly said, you can get into property. Obviously, you can only decide what's happening when you're buying it. But the important part is when do you really make money, and if your strategy is around sales or flipping or something, so then basically you have to think about it, which is something which is very close to our heart, and some of the things which we do within Property Deals Insight is around the valuations. We actually have a fairly detailed valuation report. It's not just about what the value we do. We also provide all the analysis why something should be valued at, and if you want to be adding value, etc. So ultimately, obviously, it depends on what your exit criteria is, how much money you want to make, etc. But what we can actually allow you to do with the platform is trying to help you if you wanted to check what should be the valuation of the property at that stage. And of course, you have to be thinking about your taxation, etc., and whether or not it's sensible to sell it, because of the recent tax rule, it is becoming more and more harder for people to do it. Whether you're doing it via SPVs or how you actually dispose of your asset is different. But ultimately, what value you get from the property is something which we can definitely help with.
Yeah, for me, a selling decision is always a buying decision, and I say that because the single worst thing that you can hold in a low interest rate, high inflation environment, which we're in at the moment, is cash, right? So selling a property pretty much at any time to sit on cash instead is probably not a wise decision. So to me, if you're selling a property, you're selling it to buy something else. It doesn't have to be a property. You might be selling it to buy some stocks and shares. You might be selling it to buy another property. And so when if it comes to evaluating a sale is about evaluating the asset you're going to replace it with, asset or assets you're going to replace it with in your portfolio, and then it comes down to just a comparative analysis of two different assets. So if I'm liquidating one asset to buy one or more other assets, I want to know, why am I doing that? I think I'm going to get a better return in the next 5 years on what I'm buying, and how confident am I about that, and does that justify, of course, the transaction costs, which in the property market now are high, right? So that's how I would always think about the sale process is what comes next with that money. Hugh, anything to add?
Yeah, I've got it's a slightly different answer because it's a different sort of subject matter. But this is actually one of the easier things when it comes to planning, is because you know what you're disposing of, and typically it's a new build or conversion. So again, it's a personal question. What are you happy at exiting at? But if you've done your due diligence and you can work out what your build costs are and what the achievable value of a new build is, which again, these tools are perfect for, you exit, or you have your first exit point is really when you get the planning permission. So you could dispose the site then, and you can sort of benefit from the planning gain, or if you've got it built in to handle the construction and the build out and then actually sell those new builds yourself, you know that there's going to be an exit. And like I said, new build, typically we see it sells for about 20% more than old stock. So you've got two ways of looking at those values. One is looking at what new build sold for. If you don't have enough of those comparisons, probably not a great sign, but you can always look at old stock and put a bit of uplift in. But again, planning is probably the bigger exit than
Sorry, I'd like to add a little bit more to that. Actually, one of the other things is in terms of, it depends on what you're actually doing to the property. A lot of people would do flipping, etc. So within our tool, what we do allow you to do is put property condition, etc. And if you've added any square footage or any added like more parking space, bigger garden, etc., depends on what you've actually done with the plot or the property. So which allows you to actually see what the valuation is based on the new attributes of the property, which can actually help you with your decision when is the right time to sell, whether or not it makes sense for you to actually sell that. So that is something which you can actually do. I mean, I'm actually doing another session tomorrow where I'm going to be in Tier 1, where we are going to be showcasing a little bit about the platform, about some of these topics. If you're around, then feel free to have us again.
Sorry, one thing to add to that, it's actually very interesting on the new build premium. It's something I actually look for quite a lot. So the national average is 29% for a new build premium, right? We always factored in 10 to 15, which is perhaps why we didn't build anything in 10 years, because we're too conservative. But look for the spread between the new build premium and the used stock. If the new build premium is that kind of high, then start buying used stock, because it's going to ride up with it. But again, 29%, I think in my mind is madness. I don't encourage anyone to buy through Help to Buy. But yeah, if that spread's that high and people are actually selling out the units, so they don't have to sell all of them, but most of them, start buying the used stock next door. It's going to ride up with it, is what I'd say. But don't sell it if you already own it. So.
Have you looked into what happens to the value at the moment? Say if someone buys a new build and then sells within a year, what happens to that?
Well, usually they take a bath, then they look what happened in Elephant and Castle. Elephant and Castle, people have been hammered. But but the people who've owned them for like 3-5 years have sort of caught back up, haven't they?
Yeah.
One thing I'd just like to promote these guys as well, do a bit of sales for them, is we came up with Sprift, which is very similar to what these guys' platform was many years ago, to reduce transaction times and reduce transaction costs, right? I can almost guarantee you, if you start presenting your lawyers with more information, become less of a hassle to them, because when they send you the reports, like, I knew that, you can really start to hammer down your prices, just an FYI. So you save money with the lawyers, and they like you more as well. So.
Yeah, that's a very good insight.
That's a practical tip there. Good. We've run 2 minutes over, which means we must have been having a good time. So thank you very much. We're going to hang around a bit at the end if there's any more questions. But thank you very much all for joining us.
Thank you.
Thank you.